staying with gold, the long-term trend line for gold has been extremely bullish. But historically, the corrections in bull markets are often extremely violent and work to shake out some of the more timid investors before the primary trend continues. Do you think that breaking through 1,500 as we have recently, that a correction of 20 or 30% is reasonable or possible really in gold?
No, I don't think we're looking at a correction of 10 to 20% or 20 to 30%. 10%, it's possible, but I don't think it's likely that we'll have a correction that deep. I think there's too much money waiting on the sidelines to move into gold for you to have that good of a buying opportunity. Maybe silver. I mean, silver potentially could have a correction of that magnitude, 10 to 20%. But again, I wouldn't bet on it. I think there's a lot of money that still is moving out of paper into real money, into gold and silver. That's going to continue. Not only individuals, but central banks all around the world, I believe, would be major buyers on any dip. So I wouldn't be looking for that to happen. And if you look at the precedent here, we only really had we were on a gold standard in the United States until 1971, and the price of gold was fixed. It was $20 an ounce up until Roosevelt devalued in 1932, and then the price of gold here was fixed at $35 an ounce. It stayed at $35 an ounce until Richard Nixon devalued the dollar twice. I think the last time it was to $42, and then he completely went off the gold standard, and then gold started to rise. We had the one bull market from the 1970s where gold ended up hitting a high of 800, but settling into a trading range between 300 and 400, with some moves to 500 and some moves into the 200s for the next 20 years. Where gold started at 35, so it ultimately settled into a trading range 10 times higher than where it began to rise. So if you look at where this rally began, gold began at a low of about 250. And so if we're going to follow the pattern of the previous bull market, you should see the price of gold rise to about 5,000 and then settle into a range of around 2,500. But I think you're going to have a much bigger bull market this time than we had in the 1970s because the problems are much worse, the country is in much worse shape, and the Federal Reserve is not in a position to fight the inflation. In fact, it is generating the inflation. That's its policy. The only way that they were able to stop the gold rally in 1980 was bringing interest rates up to 20%. Is there any chance that the Federal Reserve is going to embark on that type of policy today? And if they did, how could we survive it? Given all the leverage in the system, in the government, in corporations, and how can the economy withstand rates even at 10%? They can't. So it's basically there is no way to stop this gold rally until the stakes are so high that there's no choice. And that means that we're staring at Weimar Republic, Zimbabwe-style inflation. And only at that point, I think, will the monetary authorities have the guts to do the right thing. And who knows how high gold prices will be by then.
It sounds like for a lot of those factors, including the central bank buying, maybe one of the reasons why you don't think that something like a 50% correction in the middle of the bull run like we saw in the 70s is in play for this one, although this bull run could last a lot longer.
Yeah, and I still think for the huge move that we've made, there's still very few players involved. Of the major pension funds, it was just a big story that the University of Texas put 5% of its endowment, $1 billion, into gold bullion that it's storing. But that's just one endowment. What about all the rest of them? Very few individuals still have gold. And in fact, the only reason that you see a lot of ads on television and on radio for gold is because the companies that are running these ads are so ripping off their customers that they can afford these ads. I mean, a lot of these companies out there are charging markups of 70, 80, 90, 100%, meaning, if people want to buy $5,000 worth of gold, they're actually sending the gold broker $8,000, $9,000, or $10,000, and they're getting $5,000 worth of gold, and the gold company is putting $5,000 of commissions in their pockets. That's the reason that they can afford these ads. If these gold companies that are advertising on TV and radio were charging realistic prices, like my company, where we mark them up 2 or 3%, you wouldn't see a single ad for a gold company on television because there's not enough volume. The dealers who are legitimately charging are not selling enough gold and silver to afford to advertise. But people see all these ads and they think, oh, there must be a bubble. No.
Peter, we need to take a quick break, but I want to stay on this issue of gold. So when we come back, why don't you pick up where you left off? Hello, everyone, and welcome back to Covering the Spread. I'm your host, Dimitri, and we're speaking with Peter Schiiff, CEO and Chief Global Strategist of Europe Pacific Capital. Peter, we were talking about gold before.
Yeah. We were talking inflation, gold, the Fed.
Another question that I have is about talking about foreign exchange, and because you're suggesting that a hyperinflation event would come from the foreign exchange markets, as others have, as John Williams has. Now, do you believe that capital controls are in play? We've already seen where customers have a harder and harder time to move their money overseas without having to report more and more transactions.
I believe that capital exchange controls will come into play. As the dollar sinks, the government, instead of looking into its policies that are destroying it, it will simply try to react to the fact that people are trying to protect their wealth by moving it out of the dollar, and I think they will try to impede those transactions with some type of tax or any other way, or outright banning the buying of foreign currencies or precious metals to try to force Americans to use dollars. I mean, I think that prosecution for this guy for counterfeiting, for making an alternative to the dollar, shows you where the government's head is, because they're saying it's illegal to create something that competes with the dollar. Not that these Liberty dollars, nobody would confuse them with U.S. legal tender.
Right.
So that's really what counterfeiting is making something that's pretending to be something that it's not. That's printing up a $100 bill that's not real and trying to confuse somebody into believing that it's legitimate. But what he was doing was saying, no, this is not a Federal Reserve note. This is not legal tender. This is something that is you could use instead of legal tender. And their government is saying, well, that's not even legal. And they're using counterfeiting laws to prosecute that. So it shows you where their head is. And I think, you can look at a lot of the new reporting requirements that are coming in for ownership of foreign stocks and foreign assets and offshore bank accounts. They're already cracking down. And it's just they're going to turn up the heat as more and more Americans figure out what's happening, and they want to get out. Because inflation is a form of taxation. It's instead of taxing us with an income tax or a payroll tax or a sales tax, they levy the inflation tax, and they steal our purchasing power. But as more Americans get wise and they refuse to save dollars, then the government can't tax them with inflation, but it wants to. So it wants to force everybody to stay in the dollar, and that's going to happen, before the end.
Can you explain to our audience how legal tender laws work and how they prevent the emergence of competing currencies? And actually, that leads me to something else that I wanted to ask you as well, which is about the possibility, if you see it, for businesses in charge of exchange-traded funds and other companies that have large gold holdings that would be looking, let's say, in this type of an environment to issue a kind of a debit account system with a capital base in gold or other precious metals.
The main problem with competing currencies is not the legal tender laws, really. It's the tax code. Because right now, if somebody were to choose to transact, let's say, in gold, and they arranged a deal where their employer would pay them gold, for their wages, and they wanted to hold it and spend it, the problem comes is every time they get paid, the IRS is going to say, well, what's that gold worth in dollars? And, of course, that's going to change all the time, and you're going to have to pay capital gains taxes or income taxes on the change in value. And every time you take some of the gold that you earned and turn around and spend it, each time you have a transaction, that's going to entitle some kind of record keeping to figure out what the price of gold is so that you can pay an additional tax. And it's like all the taxes that make it problematic, and it would probably be the IRS that would end up going after people for some illegal bartering operations or tax evasion more than legal tender laws. Although, obviously, with this case here of counterfeiting, I mean, they might try to make a bogus claim that if you're using something other than the U.S. dollar, you're a terrorist. Remember, they called him a terrorist for trying to undermine the monetary system of the United States. Well, the Federal Reserve has already undermined it. Congress has undermined it, and people need alternatives. And now the government is saying, well, if you seek out an alternative, you're a domestic terrorist.
Right, and that should affect you as well, and theoretically, because you're offering people an alternative. In fact, that's what...
Well, I made that point. I mean, if this other guy is a counterfeiter, so am I. I mean, you can easily say, look, I'm advocating that people own gold and silver. I've done that for years. I say that they should store it. I say that they should barter it. Does that make me a terrorist? But according to the government, it does, and I don't know. Hopefully, I'm not giving him any ideas because I can't. I really don't want to get involved with defending myself against such allegations.
So, Peter, for those in our audience who are interested in investing in foreign markets or taking part in the precious metals bull market, how can Europe Pacific help them do this?
Well, we can help them do it. At Europe Pacific Capital, we offer access to markets all around the world. We trade in local currency, in local exchanges. We can buy you stocks and bonds. And so a lot of times people have difficulty through more traditional brokers getting access to these markets. We can do that. We also have a lot of analysts who are researching these markets, and we can come up with the stock recommendations. We also offer individually separately managed accounts where we can manage money globally in both stocks and bonds. And, we have criteria that we look at that evaluates not only the country, the currency, the political situation, and the individual company. So, a lot of other companies, brokerage firms that are more traditional, don't bother to do that, and they don't understand the real risks that face a U.S. investor from a purchasing power perspective. They still look at the dollar as sound when it's not. And so, you've got to throw the conventional wisdom out the window as far as asset allocation, because those rule books were written for a sound dollar. We don't have a sound dollar. We have the exact opposite of that. And so a lot of investments that are traditionally thought of as safe are actually high risk, and most brokerage firms don't understand that. So we can certainly help you if you want to have a foreign portfolio at Euro Pacific Capital. We also have mutual funds, so depending on which is the most suitable. And as far as precious metals, Europac Precious Metals, we're selling physical gold and silver. And I said the important thing there is to get a legitimate gold and silver bullion and not get ripped off, not fall into a bait and switch, a marketing plan, which is so popular right now with all the big gold firms that are advertising heavily on television and on the internet. What they do is they get people to buy phony numismatic coins, proof sets, antique coins, and then they mark them up like crazy so that you need almost a doubling in the price of gold or silver just to break even. And that's not an investment. I mean, you're not investing money if the price has to double to break even. But a lot of people are falling into that trap. So at Euro Pacific Precious Metals, you don't have to worry about that. The markups are very low, and we're just selling a very common bullion in coins and bars, so that if gold goes up, silver goes up, then you'll profit.
Peter, we're nearing the end of our show, so I want to thank you for spending so much time with us. We look forward to having you on again soon, and people should definitely check out Euro Pacific as well as some of your books. A lot of the work you've done in the past is really awesome stuff.
There's a lot of all that information is online. I've also have my own radio show now. I do every day for 2 hours from 10 a.m. to noon. You can listen to it on schiiffradio.com. The Peter Schiiff Show, and stay up to date with what's going on.
All right, thank you very much. Have a great night.
All right, thank you for having me on.